Hello, it's Ken Moore from Global U Investment Advisors. I'm here today to talk to you about the Brexit. It came as a big surprise to most observers that voters in the United Kingdom voted to leave when most pundits and even moneymakers voted on remain. What does this mean? Well, in the short term, it means volatility. European and some other international markets were down 8 to 10% today. We believe this is an overreaction that may be corrected shorter term, but in a fundamental sense, it won't change the economy of Britain a lot. British citizens will just have to negotiate individual deals with Europe, just like other non-EU members like the United States. For that reason, we see it as a buying opportunity. We'll be putting cash to work into investments that we believe are fundamentally sound. That all said, this vote to Brexit represents a sea change. Since the EU was founded in 1993, it has grown steadily. I worked for the EU, privatizing companies in Ukraine from 1993 to 1994. The purpose of the EU was to unite European countries after World War II. Over the last several years, that purpose may have become overextended. The British vote to leave was a signal that the voters in the UK are fed up with the establishment and want to independently decide their fate. It seems clear that this change will not end. Other countries are likely to begin the discussion of leaving the EU. There will be more opportunity. There will be more volatility in markets over the coming months and years, and with it more opportunities for globally oriented, active managers intent on capitalizing these opportunities. We think it's a great time to be a global active manager. I urge you to put money to work that you have on the sidelines. Remember, the evidence is overwhelming that investors make poor market timers. The world's largest fund, the S&P 500 Vanguard Fund, made 3.2% in the last 15 years. Investors' return was 3.2% in that fund. This happened when the fund made 5.4. Investors bought and sold at exactly the wrong time. They reacted emotionally. Our job is to guide our clients, to help them make decisions in their long-term best interests. In this environment, where overseas stocks traded valuations significantly lower than the U.S., enterprising investors look overseas for returns. So I was just in Toronto and I met with the Chief Investment Officer of Morningstar, Daniel Needham. He shares this view. We continue to feel it's prudent for most investors to have a significant risk budget allocated overseas. Please feel free to ask us any questions you have, and we look forward to talking to you. Thank you.